What we're talking about today is genuinely the single most important thing that I did that let me quit my job way sooner than I thought I could have. I had set an 18-month goal, but I did it in 3. But I honestly don't think that it's a talk that most people want to have. They'd rather just deal with it later. But honestly, it's not super complicated because today we're going to talk about how to handle your business money. Also, I was really surprised that you guys wanted this video over the video on how I quit my job, but maybe you just already knew that they were interconnected. So let's get into the 4 crucial steps to make sure that you're always profitable in your business. First, understand what your business is there for. It's not just philosophical. There are a lot of practical things, but a lot of times I'll hear people say that they want to get into business either just to make the most money possible or because they really need to leave their 9 to 5. Now, those aren't the worst motivations, but they'll really easily lead to burnout and frustration because these things all take time. So you need to think what you actually want your business to do for you, and having goals for your lifestyle out of your business will help you to figure out the actual numbers that you might need. And this should be the case with stuff that you do in your personal finances as well, but we'll leave that for a different video. This doesn't just include your dreams, it's also really practical because it'll help you to answer the question, how much do you actually need your business to make for you? I feel like honestly the cop-out answer is as much as possible, but that's inherently unattainable because there's no goal there. There's going to be different numbers that everyone needs to hit. Do you want to make the same amount of money that you did at your job, but you still want to leave your job? Then your business is going to need to be able to pay you as much as your previous salary. Do you just want to leave a job and not have a boss telling you what to do? Then you're going to need to find out what your minimal expenses that you can live on and be comfortable with is, and then your business will have to make you that much, which will probably be less than what your current lifestyle is. But also you should have an emergency fund if you do that. Or maybe you simply want a side hustle to pay for your family vacations every year, in which case there's going to be a completely different number. But knowing this is so important because then you'll have an actual number to measure against to know if you're close or far from where you need to be. And if you started a business already, you might already be in a position to where you could reach your goals, but you haven't known that because you've just been thinking you need to make more and more money without actually realizing how much you need to make. As we go throughout the video, I'll give examples from how I quit my job for everything that we talk about. And so for this, I simply needed to quit my 9 to 5 job because I really didn't want to have a boss telling me what to do. And I knew that we wanted to move into this van that we're currently building out. And I had a lot of business ideas that I really enjoyed working on way more than my 9 to 5. So finding the fastest way to leave that and still be able to survive is what I needed to do. So looking over our monthly budget, we realized that we needed a minimum of $3,200 a month to be comfortable. My wife was making $2,200 a month, and so the business needed to be able to pay me $1,000 per month in order for me to leave my job. And on top of that, we did have an emergency fund of 3 to 6 months of our total expenses, plus our van fund, which was about 9 to 10 months worth of pay for me. That since we needed YouTube or some other location independent job to be viable for us to live in the van, we felt comfortable to use that as an emergency fund because we can't buy and move into a van if we can't make any money while we're doing that. So does that mean that I only need to find a way to make $1,000 of revenue every month in my business in order to leave my job? And I'd hope that if you're even thinking about this, you would know that the answer is no. So this is kind of where the secret sauce comes in that allowed me to quit my job sooner. So the second step is to know where to put your business money when you get it. Now this isn't something that I see a lot of people talking about when they talk about business, and I really don't understand why, because I think it's the single most important thing that you need to do in your business to make sure that you stay solvent and make sure that you stay profitable. Because your business can't simply funnel all of its revenue directly to you in your personal bank account or your owner pay account, which is what we'll get to here in a second. And this is where I should clarify something real quick. I keep saying business, and one of the questions I get all the time is, should you start an LLC or as a sole proprietorship? And I started as a sole proprietorship, but I say business because that's how I want you to think about things. Just because you don't need any official business registration doesn't mean that you don't need separate money for your business and personal expenses. Even as a sole proprietorship, I use these same principles that we're going to get into to open different bank accounts that would separate all of that money so that I wasn't using any business money for personal use or personal money for business use, because that's not only easier for you in your bookkeeping, but it's also way better for taxes in case there is an audit that you get, even though it's an unlikely scenario. So I say business whether you're a sole proprietorship just doing a side hustle or you have an LLC or an S corporation, because that way you'll think about it a little bit more intentionally. So let's talk about where you should put that money. We got off the big whiteboard, but we're also going to think about the 5 essential things that your business needs to do with its money, no matter what. This is going to be awkward. There's nowhere to put this. These are the 5 things. They need to pay you, maybe, reward you, pay to play, pay to operate, and plan for the future. So before you even get any revenue, you should know how much generally you want to put towards each of these different things. These are the things that your business needs to do. Let's change these to the names of the categories or the different accounts that you're going to put money into. Pay you becomes owner pay. This is the money that you're going to be earning for running the business and actually doing work in the business. Reward you becomes profit. This is the money that you earn not for doing work in the business, but for owning the business. Pay to play is taxes. These are necessary, but there are plenty of write-offs that you can take as a small business owner, and I can get into those in different videos. Pay to operate is operating expenses, or also OPEX, money used for the month-to-month operations in the business, and planning for the future is retained earnings. Now this is money that you're going to be using either for future business ventures, for equipment upgrades, or as a rainy day fund for your owner pay account. Now I personally think that the best way to make sure that you have money in each of these different categories is to actually have have different bank accounts for each of these different categories. Because if you just kind of keep them in your accounting software, then it's going to end up being a pain in the butt trying to figure out if you have enough money to operate the business, or to even make sure that you get paid. If you keep all that money together, you might be taking money that you need to pay off something on your credit card to pay yourself. Now, personally, I have 10 business banking accounts. These are all of them right here, but I really only think at a minimum you would need a profit account, an operating account, and a tax account. You could fit inventory into your operating account, you could fit owner pay into your profit account, you could put retained earnings into your operating account, but at least have something separate for taxes. And you can find a bank that won't charge you fees for any of these accounts. I don't pay any bank fees. That's one of the things that I hate in the world most is freaking bank fees or interest charges. I don't pay any of that ever. If you do Amazon or reselling or any other type of thing that has inventory, I would recommend having an inventory account, which is what I keep with Chase, and a savings account that you keep separate from your operating account, because inventory is kind of technically a current asset. So accounting wise, it's a little bit different, but it's also a little bit different in how I deal with it in my business. Might not be for you, but it makes a lot of sense for me to have a separate account for inventory. After you figure out which accounts you actually need, you're going to need to figure out how to allocate money to them when revenue is coming into your business from its different sources. Now, step 3 is arguably what will make or break your business. Allocating a percentage of revenue to each of the different accounts that you have and knowing how much to do that. So let's dive into the 5 main accounts that we went over at the very beginning. Talk about how to find out how much to put in each of those. We're going to switch up this order to make the most sense as we figure out how much to put in each of these places. We got profit, OPEX, which also would include inventory, owner pay, taxes, and then retained earnings. Now, profit is the first thing because that way you're always rewarding yourself being a business owner and owning this business. And it's also just nice to know that you're always going to be profitable by putting money into this account. Now, this doesn't have to be a lot. In fact, I started with 0.1% in my business, and that's still what I'm doing in my Amazon business. And even though it's not a lot, it's really nice to know that with that 0.1% of total revenue, I would be able to go and buy myself a coffee every month or a pretty decent meal at the end of every quarter, just rewarding myself for owning this business. All these numbers can and will change over time as your business grows and evolves. Second is operating expense. This is also a pretty easy number to figure out because if you're already running a business, you know about how much, or you should know how much it takes you to run your business every single month. And if you're getting into a business, you should do some research to find out what you might need every single month. So I'd figure out every single software that I use, everything that you buy on a recurring monthly basis. And then I would also add a little bit of a cushion in case you want to buy something else or something comes around every quarter or so. And that way you can build up a little bit in that account if you do end up having those bigger months. For me, currently, I have $119.25 in recurring software subscriptions. Speaking of subs, but then also on top of that, I save an extra $100 in my OPEX account because I also have things like buying poly bags for my reselling business. And this is all reselling specific, not YouTube. That's what allowed me to quit my job. And so that $100 will go towards anything that I spend in the month, and anything that doesn't get spent, I'll keep in that operating account. Some people would transfer that to retained earnings, but I don't worry about that because I use that for different purposes. So to figure out what percentage, since you're doing percentages for everything, you would allocate to this, you would take that $220 and divide that by your revenue in order to find out what the target percentage would be. Now, I base this on my minimum amounts because I have my operating expenses cap at $220 because that already is more than I'm going to need any given month, and so the extra I can put towards retained earnings. So I base this on around $4,000 to $4,500 in revenue, so my percentage is 5% that I put towards operating expenses, just about 5%, up to $220. And then, like I said, if I make $5,000, $6,000, $7,000, $10,000 in revenue, all of that extra is going to go towards retained earnings because it will still be in the business. Now, also under operating is inventory account, which I have a separate account for, and I think that's probably best if most people did. I touched on that a little bit in my last video, and it would be a lot to get into in this one, so if you want a specific Amazon video, just let me know. But just so you know, I used to put about 60% towards inventory. Now it's about 65% as I'm trying to pay down my inventory debt. The third thing is owner pay. Now, this is where you're going to go back to the first part where you figure out how much money you actually want your business to pay you. If you remember when I first talked about these different accounts, I said owner pay maybe. That's because when I started my business, I put $0 in owner pay for the first 3 or 4 months because I was still working at a different job and I didn't need any money, so I was able to reinvest it all back into the business so that I could scale it faster. Then after I quit, I needed to make sure that I could pay myself $1,000 out of this business every single month. So I took that $1,000 and I divided 1,000 by my monthly revenue, and that's how I figured out my percentage that I wanted to allocate, which for me was 25%. Once again, that's based off my minimum revenue, but I also didn't just take this $1,000 and divide it by revenue. I took $1,050. That way I could be increasing my owner pay account, which would add a little bit of a hedge in case I had a bad month so that I can make sure I paid myself, which is what I ended up having to do last month. But not because it was a bad Amazon month, because it was a bad money month. Unfortunately though, you might find that this number that you want to take out of your business divided by your revenue gives you a ridiculously high percentage of your revenue put towards owner pay, which isn't sustainable in your business. Now, that's why we talked about profit and operating expenses first, because that's how much it's going to take you to continue running your business on a monthly basis. And then you can adjust owner pay and taxes, which is going to be a percentage of owner pay plus profit, to make up the rest of that 100%. So if need be, you'd have to lower the percentage that you take out of your owner pay or the amount that you put into owner pay initially while you're getting your business going, so that later you can start taking out the full amount as you make more money. So if you need $2,000 to leave your 9-to-5, but your business is only making $3,000 in revenue right now, taking out 67% just to pay yourself is probably not a sustainable thing in your business, especially because you're probably going to have operating needs. You're going to need to pay taxes on that $2,000. You actually might with $3,000 on $2,000 depending on how lean your business is. But if you wanted to reinvest a lot in your business and you had a little bit of time before you had to pay yourself that much, which is a lot of money to be taking out of $3,000 of revenue, you realize you're doing 1% for profit, 40% back into the business because that's how much you needed to put into the business. And then you could see that if you took 40% out of the business, you'd be able to have about 16% in taxes, which we'll get to in a second, and then the rest could go towards retained earnings. And so 40% can be your target. That way you can know how much revenue you need in order to make that $2,000. All you have to do is $2,000 divided by 40% is equal to $5,000 in revenue. So you know that when your business is consistently making you $5,000, you'd be able to quit your job, especially if you had an emergency fund. And if you were already putting a little bit into that owner pay account over the past couple of months, because you were making $1,000, $2,000, $3,000, or $4,000, you'd already have a little bit of a surplus in this account. Now, the reason that these first three, profit, operating expenses, and owner pay, can't equal 100% is because you do have to pay taxes. Please don't be someone who forgets to pay taxes and then comes to tax time empty-handed, which is what happens to a lot of new business owners because they're just thinking about scaling their business and then they forget to pay taxes and then they're out of money come tax time next year. Now, we won't dwell here long, but here's my rule of thumb. For taxes, my rule of thumb is to take profit, 0.1%, plus owner pay, 25%, and then multiply that by either 30 or 40%. I tend to stick to the higher side because that way I make sure that I'm covered in come tax time. And you want to put this in an account that you're never going to touch. You're going to act like the government does for you when you get your tax refund when you were working at a job, because all the government does is put all that money into essentially a savings account. And then when you do your taxes, if you gave the government $5,000 from your checks over the course of the year, but you only owed $3,000, they'll give you a $2,000 tax refund. Now, instead of that, you're just going to be saving for your taxes yourself in your business. And then when you do your taxes, if you save $5,000, but then you only owed $3,000, you're still going to have that $2,000 and you can use that either as a bonus for yourself, into retained earnings, or investing it back into your business. And so since I like to go with this 40% number, this generally for me is about 10.4%. But here's why I say 30 or 40%. When you're self-employed or have a small business, you have to pay 2 times the normal FICA tax that someone who works at a job does. Now, the FICA tax is what covers Medicare and Social Security, and normally you split that with your employer. But now you're both the employer and the employee, so you pay both sides of that tax. Right now, that's 15.3%, but then you also have to pay state and federal income taxes. But I always want to make sure that I overestimate on this because worst case scenario, I just get a bonus at the end of the year, which is great. If you wanted to, you could sit down and figure out your expected revenue, your standard deduction, your effective tax rate, all the write-offs that you're going to have, and then you could calculate pretty much exactly how much you're going to need to pay in taxes. I don't want to deal with all of that mess, so instead I want to overestimate so that I can just get a bonus at the end of the year or at the end of every quarter if you pay quarterly taxes. This is why I think 30 to 40% definitely does that. If we look at someone who's making $150,000, which is what you're taking out of your business, $12,000 plus per month, and then they live in California and are single, so they get a lower standard deduction than if you're married. They would be paying an effective tax rate of 18%, plus 7.14% FICA tax, plus the other half of that, which we're going to add back in at the end, plus 7% state tax, and their total income taxes would be 32.3%. If we add back in the other half of FICA, it'd be right around 40%. Now, I don't have any state income tax, so I don't even have to worry about that. But if I just save 30 to 40% of whatever I put into my owner pay and profit accounts, I'll be more than good come tax time, and I won't have to worry about it. And this also gives me peace of mind in case I make any local sales, and don't worry about the sales tax on that because I'll have the money in my tax account because I overestimated what I was going to pay for taxes. It's the same thing as getting a tax refund, except I think it's a little bit safer because you have to cover your butt as a business owner a little bit more because that's your whole livelihood pretty much. Okay, mini rant over. Let's get back to retained earnings. Now, some people might not think that they need this account, but putting money away for a rainy day fund, or saving for any equipment upgrades, or having completely new business ventures like me and moving into the van with my wife so that we can create another business around that and just live the life of our dreams are all really good reasons to have a retained earnings account. And so how much should you save in it? This is going to depend a lot on your business, and for right now in my reselling business, I'm not saving anything beyond that because I'm still working on a couple other goals inside of that business. That just means I don't initially allocate money to it. I do save money in retained earnings as long as I make enough revenue to have more than $1,050 in owner pay and more than $220 in operating expenses. All of the overage on that goes right down into retained earnings. But if we're looking at something like my wife's business, where she doesn't have a lot of overhead and she ends up putting enough in the owner pay account, has a decent amount in operating expenses that she has a large surplus there, she ends up putting about $300, $350 into our retained earnings account, which we're using towards our van right now, every single month. So it's just going to depend on your business and what you think you might need or want to do with that money. Now, these will change in the life of your business, and if we're just looking at my reselling business, when I quit my job, this is what my allocations were. Profit was 0.1%. Owner pay was 25% up to $1,050. Taxes were 10.4% up to 40% of owner pay plus profit. Operating expenses was 63.9%, which was split 3.9% in the specific operating expenses account, which is only up to $250 max, and then 60% towards inventory, which you've already known I've changed, and then retained earnings was at 0.6% plus any of the extra from taxes, operating expenses, and owner pay, which got erased somehow already. And all this is great, but it doesn't mean anything if you don't do it. So I do have a couple of really practical ways that you can do step 4, which is actually do it, which also includes another bank account that I haven't talked about yet, but is one of my favorite ones, honestly, and it's just the income account or the revenue account. It was at the very, very top of my 10 business accounts, the revenue account, which I have at Chase as a checking account. And this is just the account where literally all revenue comes in from all the business ventures that we have, the YouTube channel, eBay, Amazon, Carissa's business. That way I can always drop it down to 0 whenever I do my accounting and my transferring of money into the different accounts, so that I can know that I've allocated all the money exactly how I want to. Personally, I do this a little sporadically, basically whenever I get large deposits into the account or when Carissa gets her check from her biggest client, but you could also just set 2 days every month to do this, like the 5th and the 20th, which is what the guy who actually wrote the book on this talked about doing. And if you're wondering, the book is called Profit First, and I've kind of adapted that framework to make a little bit more sense for me and my business, but it is a good book. One quick money saving tip, like if you want to read books or even just listen to books, most public libraries that are in your area are going to have free audiobooks and free ebooks that you can download if you just download an app like Hoopla or something. Check out your library because you can probably get a lot of the books that you want to read for free. It really doesn't have to take long, but setting aside money to go into the correct places in each of these areas will not only make sure that your business stays profitable, but you'll know how much money you have to spend in all these areas before you go and spend it, especially if you're using a credit card like I am. So I can look and see how much I have in my operating account because the money is always correct in there, and I don't have to just look at this one big account that has a ton of money in it and wonder how much I can actually use for operating because it's in its own place. Personally, to make my life easier, I have a spreadsheet where I have allocations for all of my YouTube stuff and any reselling things, so that once I get revenue, I can just plug the revenue in here. Say I get a $2,500 pay from Amazon, I'll plug in that $2,500, then I'll know that I'll send $250 to profit, $625 to owner pay, $130 to taxes, $117.50 to operating expenses, $16.25 to inventory, and then $0 to retained earnings now. And then since you also get a second pay from Amazon, I have another one down there. You can make something like that for yourself, or if you're interested, I don't know if that would honestly make a good video because it's kind of a boring, tedious process, but I might be able to do that in a live stream because I've noticed that you guys said that you want me to do some live stream because I asked you about that. So we might be scheduling some of those soon. I know that this is a lot, but this is probably one of the most important things that you can do for your business, is making sure that you're using your money wisely, because you can make all the money in the world, but if you overspend or don't know where your money is going, your business is going to fail a lot sooner than someone who makes way less than you who knows what to do with their money. Hopefully this scratches a little bit below the surface, and if you have any questions, leave them down in the description. Watch this video if you're a little bit more interested in the Amazon side of things, because I have 4 tips that help me be stress-free, which also includes what I talked about before with inventory numbers. Or click here to see a dumb experiment that I did with my personal finances. Peace.